The Purpose Canadian Preferred Share Fund is a fixed income portfolio that is comprised of preferred shares mainly from Canadian corporate issuers. The fund generates return on capital mainly in the form of tax-advantaged dividend payments by investing in preferred equity of high-quality Canadian corporations. Preferred equity shares offer a number of benefits to help investors build a resilient portfolio because they have positive qualities of both equities and corporate bonds. They also perform well when interest rates are on the rise. Preferred shares have less risk than regular stocks. That's because preferred shares are senior to common shares, meaning dividends must be paid to holders of preferred shares first, and the common shares will not receive any dividends unless preferred dividends have been paid. Preferred shares offer a more tax-efficient yield than traditional corporate bonds because preferred distributions are treated as dividends, while bond distributions are treated as interest income and face higher taxes. The difference can be significant. For example, for the Big Five Canadian chartered banks, including TD Bank and Royal Bank of Canada, on an apples-to-apples basis, taking into account the tax treatment of preferred equity, their yields are more than double the 5-year conventional bond yields from the same bank. Finally, preferred shares perform well when interest rates are on the rise. That's because the coupon rates for most preferreds are reset periodically in line with wherever interest rates are at the time. As a result, preferred shares tend to have a low correlation to traditional stocks and bonds. This low correlation helps protect your overall portfolio when markets are turbulent. The fund invests in Canadian preferred shares from high-quality companies across a diverse group of industry sectors. When we say high quality, what we mean is that the most important consideration in our team's investment process is assessing the corporate strength of the companies we invest in to ensure that the risk-reward is in our favor. Our team researches industries and companies from the bottom up, which means understanding industry dynamics, supply and demand, and assessing company management teams. Our investment process also includes top-down analysis. This involves identifying broader macroeconomic trends influencing the market to determine the optimal mix of industries, the kinds of preferred shares we buy, and how we manage risk. Combining the bottom-up and the top-down allows us to remain focused on capital protection and optimizing risk-reward for investors.